Consider the following scenario. You want to establish a retirement plan that would enable you to live comfortably in your later years in a lovely property, while also ensuring the financial security of your children. Goal planning helps to crystallize your aspirations, making it simpler to see something that may be a long way off in the future, and providing you with concentration and inspiration. It is critical to set financial objectives that are unattainable. Of course, everyone wants to be a billionaire, but setting a more realistic goal increases the likelihood that you will reach your ambition. To help you achieve your financial goals, we've put up a list of the top 10 good financial goals that everyone should have. Welcome to the YouTube channel, and before we start the video, don't forget to like the video, share, and subscribe to the channel so you don't miss any of our videos. Number 10. Pay off all your debts. All debt is unpleasant, but some money owed has to be handled more quickly than other obligations since it is more urgent. To begin, make a list of all your debts and arrange them accordingly to their importance. Pay off any debts that might cause you to lose your heating, your house, or force you to go to court if you don't. After that, you should concentrate on paying off your most costly debt. Credit cards already have an average interest rate of over 20%, while overdrafts may now carry an interest rate of up to 39%. You might transfer your debt to a credit card with a 0% balance transfer fee in order to pay it off more quickly. In the event that you have an excellent credit rating, you will be able to negotiate a favorable price. Citizens Advice and the debt relief organization Step Change both provide a wealth of free assistance to those who need it. Number 9. Establish a savings account. It is critical to maintaining an emergency reserve that is equal to 3 to 6 months' worth of your wages. The most effective method to get started is to create a budget that will allow you to see where your money is coming in and going out. This makes it much easier to identify areas where you may make savings, identifying which subscriptions you don't use or don't need. Where can you make savings on your spending? Look for the greatest rates on your energy and other bills, as well as your mortgage, by comparing different providers as long as there are no exit fees. Discover the best savings accounts available. Number 8. Create a number of different sources of income. It is possible to have many income sources even if you like your work. This is sort of income insurance. For this reason alone, it should be included on your list of worthwhile financial objectives. However, there are many more reasons to do so. It is possible that one of those income streams may be a part-time cash flow that will allow you to semi-retire at a young age. You might establish a side company to supplement your income if you want to start your own business but don't want to leave your employment. Using the increased cash flow generated by the other income source, you may be able to contribute to your retirement plans. Alternatively, it might be utilized to assist you in paying off your debts. You might have a variety of revenue streams that combine to form an income portfolio, which ensures that you will never be completely reliant on a single source of money. Number 7. Set up your own business. While you do not need to be a billionaire to start a company, it is beneficial to have some funds to get things up and running and to pay your expenses in the early stages. Number 6. Build a pension pot. The size of your retirement pension is determined by the kind of life you wish to enjoy in retirement as well as how long you expect to be alive. We aren't sure about the latter, but we could speculate on the former. People often underestimate their retirement needs. If you are now in your 40s, the proportion of your pre-tax earnings that should be contributed to the pension each month should be equal to whatever age you are currently in divided by 2. If you are 30 years old, you will be required to make a 15% down payment. That may seem like a lot, but keep in mind that it includes any tax breaks provided by the government as well as any contributions made by an employer. Number 5. Save for a once-in-a-lifetime vacation. Following the accumulation of your emergency fund, you may begin putting aside money for other major purchases. It may be tempting to contemplate investing, especially considering the lowest interest rates on saving accounts now available, but you may find yourself in need of the funds at a later time than you anticipate. When it comes to investing in stock market, conventional thinking is that you should be okay with your money being locked up for at least 5 years. Number 4. Get on the housing ladder. If saving for a down payment on your first house is one of your long-term financial objectives, figure out what you'll need to do to get there. So, is location more significant than the size of your home? For example, research what and where you can afford to purchase, how much of a down payment you will need, and how you will save for it all before making a decision. Starting with a lifetime ISA might be a fantastic place to start, albeit it must have been open for at least 1 year before you can purchase. In addition, examine your credit score and allow yourself a year to fix it if necessary. This will make you more appealing to any bank or building society when it comes time for them to decide whether or not to accept your application and what interest rate to give you. Number 3. Achieve a state of financial stability. The ultimate goal is to have enough money to provide a comfortable lifestyle for you and your family. This also involves having the financial means to insurance against loss of income, insurance on one's life, private health insurance may be an option, ensuring that you are protected in the case of an emergency. Should I go for a pension, life insurance, or a combination of the two? Number 2. Pay off your mortgage as soon as possible. It is probable that your mortgage will be the most significant financial commitment you will ever make. However, with proper financial preparation, you may be able to reduce the length of time it takes you to get out of this situation. The money that you have saved on interest is also likely to be more than the interest that you would receive on a savings account of any kind. However, keep an eye out for any less associated with early repayment. Number 1. Take an early retirement or work just part-time. Having a better work-life balance as a result of fewer individuals having to endure lengthy daily journeys. According to a study conducted by the wealth management business Money Farm, 1 in every 4 18 to 34-year-olds have established early retirement as a new financial goal as a result of reevaluating their priorities during the government shutdown. This, however, entails paying off your bills, including your mortgage, and accumulating a larger pension account than you would have to if you had chosen to retire when you were in your 60s. That's all from today's video. Feel free to suggest a subject for one of our future videos. Thank you for watching. Please continue to do so and remember to like, share, and subscribe to the channel.